As the European debt crisis tightens its grip on the global economy, investors around the world are bracing themselves for a summer of disconnect. But our next guest says wonderful opportunities to buy solid businesses lie just around the corner. In the interim, he advises be patient, ever vigilant, and take in some dividends. Keith Rosenbloom is a managing partner at Care Capital. So Keith joins us here. Keith.
Hey, Steph.
Before we get into specifics, tell us, Europe number, ECB coming out in just a few minutes. What's your take on Europe?
Listen, this whole environment is adding a lot of uncertainty to the marketplace, right? This is not new news. There's a lot of money on the sidelines. A lot of people are very unclear as to where the next brick could fall or the next step should go. And at the end of the day, I think this creates a really interesting opportunity set for people who are looking at investing in solid businesses. So what you've got is a situation where you have solid businesses generating consistent, sustainable cash flows that continue to decline in price. What's particularly interesting is you get these companies trading at 4, 5, 6, 7, 8 times cash flow, or cash flow yields of between, let's say, 12.5% and 25% in an interest rate environment that's practically free.
Well, what's a company
low.
that you like?
Well, yesterday, in preparation for this interview, one of my ideas got taken away, which was Iron Mountain. So we talked yesterday afternoon about how Iron Mountain was a really interesting company trying to create value for its shareholders. You had a highly motivated CEO.
This is the document storage and information management company.
Exactly. And so you had a business that was real estate focused, where private market real estate buyers are paying 4% cap rates, or let's call it 21 times earnings in the REIT index. And his company was trading at 8 times earnings. So after evaluating all of the alternatives, they decided to REITify. And the result is, don't take my word for it, but Citibank 2 days ago said, should this happen, this is a $44 stock. We find those opportunities to be interesting.
You were mentioning how there are great opportunities to buy companies at low cash flow multiples, right? High cash flow dividends.
Yeah.
Is now the time? Are they cheap enough yet, or do you see potential to buy them even cheaper if there's more downside left in the market?
So the short answer is you always have to be very vigilant, right? I think we win because we're patient capital. We never feel obligated to actually invest. And that's something that, takes a very long-term macro perspective on the environment. But when you see fat pitch situations, that's when you should put capital.
And the pitches are fat enough?
It depends on the situation.
Okay.
So
let's talk about a couple of other situations that you like, because that'll give people a sense about what you're saying.
Yeah, and by the way, I think it has to be situation specific. If you're not cognizant of the macro, which was obviously the leading question, then you're going to walk into some dangerous situations. As an example,
you wouldn't buy the market, for example.
No, I don't. Listen, that's not what I do, right? And I don't think a lot of people should buy the market, right? That's what a lot of pundits talk about. But at the end of the day, what you're really doing is you're buying good businesses. And by the way, when you can't buy a good business, don't do anything. Don't necessarily walk up to the poker tables and throw chips on the table.
Well, what other companies do you like?
So as an example, well, I'll tell you one thing. You said an opportunity. So the coal companies have been decimated, right? Coal companies have decimated. So we started to look at the coal businesses and realize that actually the fundamentals in the coal business, due to natural gas pricing and uncertainty with a lot of the energy demands, created a good short situation. So we actually went short some of the coal names, and that's worked out well. But you asked about some names generally. At the end,
things you can do now. You're already short. Coal's gone down. Let's talk about things that people, if they believe you, if they buy into your thinking, could do something with right now.
Great. There's a really great company called Primus Telecom, symbols PTGI. This is a post-bankruptcy situation, very similar to what we just talked about with Iron Mountain. Okay. This is a company that had a CEO that came in, was highly motivated to basically create shareholder value. So you have a company that today is virtually debt-free. They have $240 million of debt, but they have $260 million of cash. They've been monetizing assets. They have what's left in the business is $50 million of cash flow and a $210 million market cap. That's basically what's left. What's exciting is that $25 million of the 50 in cash flow is data center cash flow. So if you talk about themes that you can get excited about in this world, it's data usage, right? Wireless and storage. These are exciting things. So what we think is with this particular business, if you were to value that $25 million in cash flow at where other data storage centers are, or what even other REITs are, that would be Nirvana, you could get 8 to 14 times cash flow, depending upon your value. Let's just say 10 times. That means the whole business is equivalent to the value of that cash flow alone. The rest of the cash flow, another $25 million, is consisting of 3, let's say, medium growing businesses. And if you called up the CEO today, who's a great guy, and you said, hey, here's an offer for your business, he would say, here's my cell phone, let's discuss. You know, you got to be involved with managers who are motivated to make things happen.
Keith, thank you for joining us here on the Inside Track
and
bringing
some understands
of your
situation.
best ideas. Keith Rosenbloom,
My
managing
pleasure.
member.
Thanks for having me.
It's been great to have you. He's the managing member at Care Capital Group.